Hi, this is David Bennett from Financier's Mortgage Group right here in Fort Worth, Texas. We've been the mortgage approval expert since 1984. Now this week we're going to talk about how to get and keep a high credit score, or maybe you'd rather call it the building blocks of good credit. So this is a video you're going to want to bookmark and use often. Now that sounds like a simple question, but unfortunately it doesn't have a simple answer. The answer is no longer just to pay your bills on time. Did you know they now use a formula to derive your credit score, and paying your bills is only about a third of that formula? There's some other parts of the credit scoring system that might not work exactly like you think they should, but it's a system we've got, so I'm going to attempt to show you how to work within the system to maximize your credit score so that you get the credit score and of course the loans you deserve. But I'm sorry to have to tell you that to give you answers that mean anything to you, I'm going to have to take you on a very quick trip around the credit world to give you some information to help you understand some of the whys behind the credit score in the system, or else anything I tell you simply won't make sense. But in the end, we hope this video has you saying, "Ah, now I understand." This week we're going to begin by seeing what the typical man or woman on the street thinks when asked this very same question.
Sir, what do you think it takes to get and keep a high credit score?
What's a credit score? Well, first I guess you got to get somebody to loan you some money. Then I guess you got to pay it back. Say, do collections count as credit?
I'm thinking a better question for him would have been, do you know what a dentist is?
Young man, yoo-hoo! Young man, I hope you're not walking on the grass.
Ma'am, can you help me for a moment? Can you tell me what it takes to get and keep a high credit score?
Well, they say with age comes wisdom. Of course, I think it's just experience, but it's been my experience that the credit markets are controlled by a small group of rich people. They're trying to control all the money in the world. It's their way of ushering in that new world order. And all began way back when the elders of Zion, they started the whole thing, but now there's the Bilderberg Club or group and the Trilateral Committee. Oh, it's groups of all those businessmen and corporations having all those secret meetings way over there. Oh, goodness. One just can't be too careful, can they? Now, what was your question?
Ma'am, you seem to want to talk to us. Would you come over here and let us talk to you?
Hi.
I got a question for you. What do you think it takes to get and build a good high credit score?
Well, I guess you just need to get tons of credit, but make sure you pay your payments on time.
And that's it?
Isn't that all you need to do?
Well, thank you very much for your time.
Okay.
See? Most people don't have a clue. Well, contrary to public opinion, for the most part, the credit market isn't a worldwide conspiracy. Now, credit is mostly made up of a bunch of little guys just trying to make ends meet. A store that needs credit to allow them to sell their goods. A gas station that wants to make it easier and quicker to buy gas, so they put a credit card reader in the pump because of all those husbands that aren't allowed to carry cash. Now, I think it'd be safe to say that most credit is used for convenience sake rather than the real need to borrow money to buy a tank full of gas. Although with gas prices lately, who knows? So, how do creditors determine who's a person they trust to loan money to? There's a real need for some sort of reliable system that allows creditors to quickly rank or rate borrowers according to their willingness to pay their debts. Ability's one thing, but willingness is another thing entirely. So, would you knowingly lend money to someone who probably wouldn't pay you back? So why would you expect a mortgage or any other lender to act differently? No one is automatically entitled to credit. It is not a God-given right, but it is a right you have to earn, and it's not that hard to earn it. Before now, there's never been a standardized credit rating system. Credit scoring is far from perfect, mostly due to the fact there's so many mistakes on the credit bureaus themselves, But it does work most of the time. We hear all the time about these credit scores, but most people don't know what a credit score looks like or what's a good credit score. Well, scores range from 0 to about 850, but you'd rather have a 0 than a 400 because 0 means there's not enough data to score you, whereas a 400 is proof positive you don't pay your bills. No matter whether you're trying to get a credit card, buy a car, or buy a house, a 560 to 600 score is considered to be bad credit. Now, presently, it usually takes about a 620 credit score to buy a home, although with the right scenario, we can do home loans for people down to about a 560 score. But the higher your score, the more loan types are available, the more down payment options you have, the simpler the underwriting and the lower your interest rate. 800 plus scores gives you the best of everything when it comes to mortgages. Now, outside of mortgages, a 700 plus score will get you the better costing loans and credit cards. And I'm not just talking about interest rates. I'm also talking about down payment options, the terms of the loan, as well as the interest rates. Now, before we can go into how a credit score is determined, we need to talk about the keepers of the credit scores, the most misunderstood piece of the whole credit puzzle, the credit bureaus themselves. They're the reason it's so hard to maintain a high credit score. Now, first of all, you have to understand that the credit bureaus are for-profit corporations and everything you do is to make a buck. The credit score is one of those things. Credit bureaus are not benevolent government entities with your well-being in mind. If someone will pay them money, they'll post just about anything, and this is the genesis of almost all those erroneous lates and collections that always showed up happened just last month, but which actually happened much longer ago, if at all. The creditor can report just about any information and any date they want, and the credit bureau will accept it. Now, just an FYI, for almost everything, the statute of limitations is 7 years. So, changing the occurrence date allows them to report things for much longer. Now, to be safe, the credit bureaus say they use a reporting cycle of 6 years and 11 months. But they don't verify anything, and they rely solely upon the reported occurrence date the creditors tell them. So, are you seeing any potential for abuse here? I've personally seen creditors, mostly collection agencies, file things that are 12 to 14 years old and report it as if it just happened, so that the credit bureau will accept it, and so they do maximum damage to your credit score. But it gets even worse because the credit bureaus say they are not the arbiters, which means it's up to you to monitor your credit reports and keep them accurate. So I hope you're seeing there's quite the potential for abuse, which means it's tougher than ever to get and keep high credit scores. So now let's look at what makes up the credit scores. Oh, but wait, that's not a simple answer either. There are 3 different credit scoring systems. Each major credit bureau has their own system, and they don't use exactly the same methodology. But here's the approximate breakdown for the way your score is determined. Only about 33% of your credit score comes from your credit history. 32% comes from how much you owe. 15% comes from the length of your credit. 10% comes from new credit. And 10% comes from the types of credit used. So, you've got 3 different methodologies and 3 bureaus with differing information. That means you're going to have 3 different scores. Mortgage lenders usually use the middle of the 3 scores. But to make matters even more confusing, each credit bureau's score will vary according to the intended usage. That means you'll have a different score for a credit card inquiry versus a car inquiry versus a mortgage inquiry. And while you can get a free credit report each year, and every time someone turns you down for credit, you cannot get a free credit score. It will usually cost you about $36, and then all you'll get is a generic score which doesn't match any particular usage. So that means you'll only get an idea of what your credit scores are. The only way to know for sure is for a lender to pull your credit. But let's talk about the makeup of the credit score a little more. I said 33% of the score comes from your credit history. We can't tell you exactly how much good credit affects your score, but we can tell you that a 30-day late this month will lower your scores by 80 to 100 points. Now, this hit will diminish as the late ages, so a 30-day late this month is worse than a 90-day late 3 years ago. Now, remember the date issues we were talking about earlier? If a late drops your scores by 80 plus points, just think of what a collection that's misreported as new will do to your scores. The collection agencies use this as a tool to make themselves an irritant so that you'll pay them money you don't owe. Each credit inquiry will lower your credit score by 8 to 10 points for about 90 days. But the full impact doesn't disappear for about a year. I just had my credit pulled 3 days apart and it dropped my scores by 15 points. Now, I also said that about 32% of your credit score is determined by how much you owe. Now, the basic premise here is that the more available credit you have, the higher your score. So we found to keep your credit balances below 50% of your credit limits, you're able to keep your higher scores. In other words, you're much better off to have 2 credit cards at 50% of the credit limit than 1 card at 100% if it gives you the same amount of debt. Now, the recent credit card laws say that if you don't use it, you lose it. So periodically you need to charge each account up to be able to keep your high credit limits. High credit limits equal high scores because it makes it easier to keep your balance below 50%. But you don't have to go deeply in debt to do this. Just pick something you're normally going to pay cash for anyway and charge it for a few days or weeks and then pay it off. Charging your gas and meals is another way to keep your activity levels up. Getting ready to buy a home? A few months before you begin, go to your creditors and tell them you'll be buying a home and you need to have your credit limits raised. That all by itself will raise your credit scores. Now, I said 15% of the credit score came from the length of your credit history. And really all that means is that an account with a long credit history counts more than one you just opened. They prove your willingness to pay in a timely fashion and show you can manage your money well. Now, 10% comes from new credit. New credit without a history can actually cause your credit scores to drop. Why? Well, you got the inquiry, but also because the creditor doesn't know how well you'll manage your money with a new debt. Will you be able to continue to pay your old debts in an acceptable fashion with the new payments? New credit will soon count as a positive for you, but the longer you have it, the more positively it will count. Now, it normally takes 6 to 8 months before new credit is going to begin to count as a positive. 10% also comes from the type of credit used. For instance, just having a mortgage raises your scores all by itself. A car loan counts more than credit cards. Now, let me add one more crucial thing I didn't mention earlier: activity units. To get and keep a high credit score, you have to first use credit. The credit score scores your credit usage. It's not a credit rating. The more of a credit user you are, the higher your scores. The credit bureau doesn't know if you're paying the minimum payment, a little extra, or paying the balance in full. All they can see is you have activity. But the creditor does know you're paying extra, and that increases your credit rating at that company, and this can cause them to raise your credit limits. And remember, high credit limits increases your available credit, presuming, of course, you don't charge anymore, and that equals higher scores. Now, you need a certain number of open pieces of good activity to maintain a certain credit score. To get and maintain a 620 credit score, you need about 3 pieces of open good credit with no recent lates or collections. To get and maintain a 700 score, you need at least 5 pieces of open good credit without any or many derogatory items. An 800 plus credit score usually takes 10 to 12 pieces of open good credit. So you see the way Debbie was right. Now, this doesn't even begin to address the purpose of a credit score and why we even have it in the first place. But I can tell you, it's not to help you. It's to help the credit bureaus make a buck. But that'd be another whole video all unto itself. So to summarize, no one is automatically entitled to credit. You have to continually earn that right. Having no credit is better than having bad credit. You need to have continuous credit activity to get and keep your scores high. You have a lot of different credit scores. There are 3 different bureaus, plus each bureau assigns a different score based upon the reason for the inquiry. The higher your credit score, the more loan options you will have, and the better the rate and terms you will get. You need to pay your bills on time, but you only get brownie points from the creditor when you pay extra because the credit bureau will never know. More pieces of credit equal a higher score. Small pieces of credit count almost as much as a large piece. Small payments count almost as much as a large payment. More available credit equals a higher score, so keep your balances to below 50% of your credit limits to maximize your credit scores. Credit bureaus are not your friends, and you need to check the information they contain is accurate. Occurrence date is of supreme importance because the date something happened affects how you're scored. Now, I'm talking mostly about negative events there, but it's also true of the positive events. Now, recent credit has more impact on your score than old credit. The statute of limitations for reporting information is 7 years. and inquiries hurt. Keep them to a minimum. Don't keep closing accounts and open new ones, as accounts with the longest history count the most. Now it takes 6 to 8 months for a new account to join the forces of the good guys to help you with your credit score. Did you say now I understand at any time? I hope so. Well, this isn't all of it by any stretch of imagination, but I hope it's helped you understand the credit system a little better. Give us a call with any questions you may have, and we can help you plan and build your credit so that you can one day own the home you deserve. You'll find that Financier is anything but the typical lender. We have 38 plus years in the business.